Hi friends, good morning. How are you? Exams are nearing. I know that. And sir, the tension has also started to creep. Don't worry, just make sure you continue your efforts. I'm telling you, you continue your efforts till the exams are over. Don't give up in between. This is the time where you need to gather all your strength and you need to ensure that you are putting in the best what you are having in this last 1.5 months which are pending. Yeah, the last 1.5 months till your exams are getting over, and this is the time you're pulling yourself. Okay, so today we'll be discussing RTP. Yeah, we're discussing RTP for CA Final Paper 1 Financial Reporting. Now, sir, is the RTP difficult? Is the RTP easy? Frankly, your FRRTP, except one or two questions, it's seriously very easy. Except that one or two questions, always they put some trickier ones. Otherwise, the FRRTP is fairly easier. Let's see this FRRTP. Now, before I move on to the RTP, I'll just introduce one new feature. I'll introduce one new feature which is brought up by Unacademy. Now, that new feature is about this raise hand and voice chat. Raise hand and voice chat. So now Unacademy has introduced one more additional feature. During your live classes, you can raise hand, you can ask voice say doubt. The voice command is activated for you all people. In case you feel typing becomes an issue, the question what you want to ask, faculty is not able to understand, voice chat feature is there for you. So this is something new. Plus, they have a full dedicated team for doubt solving. Yes, they've introduced a full dedicated team for doubt solving. You can ask the doubt anytime. It's not necessary that you ask the doubt only to the faculty. Usko WhatsApp karo, not necessary. Even if you are watching lectures recorded later on, you have a doubt, you can put it over there. They have a dedicated doubt solving team which will be helping you for that. So that's why they say doubts you can ask anytime from anywhere. And now we have the subscriptions. Now, sir, how are the subscriptions? Two types of subscriptions are there. One is plus, other is iconic. Many students wanted a physical material. Many students wanted a test papers to be evaluated. Many students requires the help of mentor. For those students who want physical material, who want a mentor, who want a test papers being evaluated, for them we have come out with a iconic subscription. And yes, the normal plus subscription is always there. The plus subscription you can take up, use code Yeshas Live. Either you use code Yeshas Live or you can use code Yeshas. You'll get 10% discount on subscription amount. And there's a combo subscription also available for CA Final Group 1 plus Group 2. Together you'll be able to save your cost if you take up Group 1, Group 2 combo basically there. Iconic, I told you under Iconic you have a physical material. You're having evaluated answers, test papers ka evaluation will be done, and the number 3 over here is mentor is assigned to you. Again, you can use the code Yeshesh Live or Yeshesh. It will give you 10% discount on subscription. Okay, let's come to today's topic. Let us come to today's topic. This is your RTP. FR RTP. Now, if you just check out, few things are highlighted over here. This is done so that we are able to finish off the things bit faster. The things are already a bit highlighted. We are able to do the things in a bit faster manner. That's why important things I've just highlighted over here. Now, sir, where can I find this material? Ye RTP highlighted wala thing, where can I find it? I have put it on our Telegram channel. On our Telegram channel, you already have this with highlights. With highlights are available to you. Now, 20 questions are there in FRTP. Sir, is there any amendment in FR? Answer is no. Is there any amendment in FR? No. What we have done at Unacademy. Yeah, if you see my batch at Unacademy, that's the latest one. All things updated as per the latest ICI material. So no updates are pending. Sir, in case we have taken your pen drive or Google Drive classes earlier, in case you have taken a pen drive or Google Drive classes earlier, I had came out with one additional questions or amendment sheet of FR, which was already uploaded on our Telegram channel. So you have the video, you have the notes available to you. But the lectures which are there on Unacademy, regular batch as well as fast track batch, we are having both. That both are as per the latest ICI material. They have been done in last 2 months only. They are latest, no updates after that, anything. Now, total 20 questions. First one is generally the bigger question. First one is always the bigger question. I'm not starting with the first one currently. I'm starting with question number 2. Let's go to question number 2. Starting with the second question. First one I'll do it later. Just a minute. I'll come to first question later. Let's start with question number 2. Now you will realize in the RTP they've given bit of theoretical questions as well. Yeah, so it's not just the practical questions asked. Few theoretical questions are also given to you, and the way they've answered, if you know the theories properly, you can answer it properly. Now see, many students, they try to focus only on main answer. They try to focus on numericals. They don't write the theories in answer. Then you don't expect to get full marks. Any Ind AS question is there, you need to first explain the related Ind AS ka theory. Repeat, any Ind AS question is there, you need to explain the related Ind AS ka theory, and then you can come to your answers. If you are not explaining theory, marks will not be there. And that's why I always say, rather than reading a very small summary carrying only important words, better is to read important sentences. Yeah, rather than having a summary which is just carrying few important words, helping you just solve answer, you need to read important theoretical sentences also, so that you're able to write that in your answers. Okay, there's a question of Ind AS 1. There's a question of Ind AS 1. Is offsetting permitted under following circumstances? So can I offset some income against expense or some asset against the liability? Is offsetting permitted? Now, Ind AS 1 says what? As per Ind AS 1, you are not allowed to offset assets liability or income expense unless it is permitted by other standard. Ind AS 1 says don't offset unless it is permitted by other standard. Now, let's see what are the questions given over here. Is offsetting allowed under following circumstances? Expense incurred by HO on behalf of subsidiary. Expense incurred by HO on behalf of subsidiary, which will be reimbursed by subsidiary. So can I offset it in the books of holding company? See, holding company incurs an expense, they'll get a reimbursement. The question, is it really an expense of holding company? Is it really an expense of holding company? Answer is no. Imagine you show an expense and then you show an income, that will not be a correct thing. You show an expense and then you show an income reimbursement received, that will not be a correct thing. If it is really in nature of reimbursement, you are allowed to offset over here. If it is really in nature of reimbursement. Clear with this? Next, whether profit on sale of an asset can be set off against a loss on sale of another asset. So I have a PPE purchased and I have another PPE sold. Okay, actually not PPE purchased. One PPE sold and there is also another PPE sold. Two PPEs are sold. Two PPEs are sold. One sale of PPE there is a profit. Another sale of PPE there is a loss. So one sale of PPE there is a profit. Another sale of PPE there is a loss. Now tell me, if you write in financial statement profit on sale of PPE 100, loss on sale of PPE 120, people will get confused. Yeah, profit hai ke loss hai? You are writing one place profit on sale of PPE, second place you are writing loss on sale of PPE. So people will get confused. So if it's PPE only, so profit on sale of PPE, loss on sale of PPE, you can show net in your financial statement. Otherwise, what will happen? You show profit on sale of PPE 100 and then you show loss on sale of PPE 120. People will get confused. Better you show loss on sale of PPE 20 rupees. So is it allowed to show net over here? Again, answer will be yes. First wale mein, if it's really reimbursement, you can show net. Second wale mein, you can show it net. Third one, the services rendered. There are some services rendered and there are some services received from the same entity. There are some services rendered and there are some services received from the same entity. The simple words, we have purchase from same entity, sales to same entity. I have a purchase from that entity, sales to that entity. So can I say that same entity is my debtor also, same entity is my creditor also? Same entity is my debtor also, same entity is my creditor also. Now, should I offset the debtor creditor? Should I offset the debtor creditor? So now I need to go to Ind AS 115 or kind of that. They say that you can offset if you have a legally enforceable right to set off and you intend to settle on net basis. If you have a legally enforceable right to set off and you intend to settle on net basis, if debtor I'll collect full and creditor I'll pay separately later. Debtor's credit period is 2 months, creditor ka credit period is, say for example, 1 month. So creditor I'll pay separately, debtor I'll collect separately, then don't net off. You should net off or you should offset when you have a legal enforceable right to set off and you intend to settle on net basis. You intend to settle on net basis. Let's see the answer given by them. I go to the solution of question number 2. Okay, this is question number 2. As per Ind AS 1, offsetting is permitted only when the offsetting reflects the substance of transaction. Normally, it's not allowed. If some other standards allow, then you can do it. So, you may present net, first wale question mein you may present net, but it should be ensured that the substance is really, you made a payment that was in nature of reimbursement only. So, payment made, reimbursement received. Don't show expenditure and income, better you show it net zero only. Okay, next, second one, we had basically profit on sale of PP, loss on sale of PP, profit on sale of PP, loss on sale of PP. Can I show it on net basis? Answer is yes, you can show it on net basis, unless if loss is very material, you can show it separately. So you can present net gains and loss arising from a group of similar transactions. Similar transaction word is important. You can show on net basis. However, gains or loss should be presented separately if they are material. Third one, I have a debtor and creditor same party. So this debtor, creditor, they are basically your financial asset, financial liability. Debtor, financial asset, creditor, financial liability. So as per Ind AS 109, Ind AS 32, they say financial asset, financial liability should be set off if you have a legal enforceable right to set off and you intend to settle them on net basis. If these criteria are satisfied, then that debtor, creditor can be set off, otherwise they cannot be set off. Is it clear? Question number 2. Is it clear? Question number 2. Now let's go to question number 3. Now question number 3, we are required to prepare a statement of cash flow, but only operating activity. They say you prepare an operating activity, it's cash flow, but only operating activity and using direct method. They're telling us to use direct method. Don't solve by indirect. Question clearly says direct method. Okay, now this is the things given to you. There's some balance sheet items given. Inventory was 165, now becoming 120. Inventory going down. Cash flow statement, inventory goes down, cash goes up. Sir, that's indirect method. Working capital changes come under indirect method. Don't take it over here. Direct method is simple. What do we do under direct method? क्या करते हैं direct method में? Your inflows are added, outflows are deducted, non-cash items are ignored. So this working capital changes are a part of indirect method. Don't take it over here. Trade receivable as such are going up, cash and cash equivalent. And we don't have to prepare full cash flow, only operating activity. Trade payables, and you have some provision for tax. Provision for tax, opening is 65, closing is 48. Fine. Your sales, cost of sales. Other income mein you have an interest income. Question, whether interest income is operating activity? Whether interest income is an operating activity? No sir, that's not operating. That's not operating. This will not come under operating. Insurance claim received. Insurance claim received, I assume it's related to goods. It comes under operating, but this will be shown as exceptional separately. This will be shown as exceptional separately, we are required to show. Depreciation is a non-cash. That will not be coming. Ignore it. Admin selling expense will be there. Interest expense is financing. Will not come. Now forex loss. First, I need to understand forex loss is first realized or unrealized. If it's unrealized, cash doesn't go out. If it's unrealized, your cash doesn't go out. So realized hai, unrealized hai, that's one. And second, related to what? Is it forex loss on debtor creditor? Is it forex loss on foreign currency loan? Kya hai? So that will be given. I'll come to it. Then we have a net profit before tax and extraordinary item. Income tax, this is provision created during the year. This is the provision created during the year. Okay, so we had a opening provision 65 plus we created 95. 65 plus 95 total, that much was payable. Now we have only 48 remaining. I can understand 112 is paid off. If you prepare a provision for tax account, opening provision, closing provision, provision created, balancing is the tax paid during the year. You will find out the tax paid is coming 1,12,000. Okay? Now, trade receivable, trade payable include amount relating to credit sales and credit purchase only. When your trade receivable, trade payable is credit sales and credit purchases. Foreign exchange loss represent increase in liability of long-term borrowing. Forex loss includes an increase in liability of a long-term borrowing due to exchange fluctuation. Now tell me, long-term borrowing, loan taken, uska forex difference, does it come in operating activity? Loan taken, uska forex difference, does it come in operating? No sir, loan taken is financing. If I pay more for it, that's also financing. It doesn't come over here. So I understand this is also not to be taken. Now we have to solve by direct method. I need collection from debtor, payment to creditor. I need collection from debtor, payment to creditor. Assume your sales and purchase are credit only. Assume your sales and purchase are credit only. We have a credit sales, credit purchase only. Okay, assume that way. Now, so first of all, I need collection from debtor, payment to creditor. Do one thing. Debtors opening closing is there. Credit sale is there. From debtors account, the balancing figure. From debtors account, the balancing figure is your it's your collection from debtor. Now purchase, we don't have. We have a COGS. We have a COGS. Can I find purchase? We have a COGS. Can I find purchase? Yes, sir. How to find purchase? Opening stock plus purchase minus closing stock is equal to COGS. So COGS is there, opening stock is there, closing stock is there. COGS is there, opening stock is there, closing stock is there, balancing becomes purchase. Assume all your purchase are credit purchase. Now prepare creditors account. So first find purchase. Now prepare creditors account. Opening creditor, closing creditor, credit purchase. Balance is payment to creditors. So we can find amount received from debtor. We can find amount paid to creditor from debtor creditor account. From debtor creditor account. Then admin and selling expense, they are assumed to have been paid. Nothing is outstanding, so they are paid. That comes under operating. And tax paid will come under operating. Tax paid will come under operating, and this insurance claim received will also be operating but shown separately exceptional. Insurance claim received will also be operating but shown separately exceptional. Let's see the solution. Okay, this is the solution given. I go to working first. First, based on COGS, they calculated the total purchase. Opening stock, purchase, opening stock plus purchase minus closing stock is COGS. They found purchase. Now, amount paid to creditor, opening creditor, closing creditor given, purchase we found, and balancing is your payment to creditor. Same way in your debtor, opening debtor, closing debtor was given, sales is given, balancing is collection from debtor. So did we got collection from debtor, paid to creditor? Collection from debtor, paid to creditor. Now, provision for tax account they prepared. Opening was 65. Closing is 48. We created a provision. What is the entry when I create a provision? P&L to provision for tax. P&L to provision for tax 95. Difference is nothing but your tax paid 112. Difference is nothing but your tax paid 112. Okay, so in your cash flow, collection from debtor will come, payment to creditor will come, admin selling expense with paid will come, tax will come, and we have a fire insurance claim received. That's exceptional, show separately under operating. Go to the solution now. Check. This is collection from debtor, paid to creditor, collection from debtor, paid to creditor, admin and selling expenses, tax which is paid, and the exceptional item we are showing it separately 110. Did you understood this? This is question number 3. Okay, let's move ahead. Going to question number 4. Now, we have Ind AS 27 separate financial statement. Now, as per Ind AS 27 SFS separate financial statement, investment in subsidiary associate JV, they can appear either at cost or as per Ind AS 109. Yes or no? They can appear either at cost or as per Ind AS 109. Now, can I have in my SFS investment in subsidiary at cost? And my investment in associate at fair value through PNL or fair value through OCI, that is as per 109. There should be investment in subsidiary associate JV can be either at cost or as per 109. So can I have investment in subsidiary at cost, investment in associate at FBT PNL or FBT OCI? Yes, no. Answer is yes. So that's the question. This is in your SFS, investment in subsidiary is at cost and investment in associate is at FBT PNL. So can they do like this? Answer is yes. See, investment in subsidiary is one category. Investment in associate is another category of investment. I need to have category-wise same policy. So can I have investment in associate at FBT PNL and investment in subsidiary at cost? Answer is yes. Check solution. Question number 4. As per Ind AS 27, I'm just reading the highlighted ones. It shall account for investment in subsidiary associate JV either at cost or as per 109. And further, the same policy should be there for each category of investment. Category is not defined, but it seems investment in subsidiary associate JV will qualify as a separate categories. Investment in subsidiary is one category, associate is another category, JV is another category. So can I have investment in subsidiary at cost and investment in associate at FBT PNL? Answer will be yes. Thus, so AB Limited can carry investment in subsidiary at cost and investment in associate as financial asset in accordance with 109. Did you understood this? Okay, next one, going to question number 5. This is important and bit different. Alakche. Question number 5. Question number 1 and 5. These are the two questions which are a bit different. Everything else is ditto similar to what is there in our material. Just question number 1 and 5 are a bit different. Fifth one, it's on Ind AS 113. Fifth one is on Ind AS 113. Ind AS 113 is fair value measurement. Yadaya? It's on fair value measurement. We are required to find out the fair value. Okay, fair value is from entity's viewpoint or market participants' viewpoint. Fair value is from entity's viewpoint or market participants' viewpoint. Sir, it's always market participants' viewpoint. TK. It's a market participants' viewpoint. Now you have some decommissioning liability. Which is estimated to be after 10 years. You have to dismantle after 10 years. You have to dismantle at the end of useful life, which is estimated after 10 years. And if A Limited was contractually allowed to transfer the decommissioning liability to market participant, they say market participant will use the following inputs. Market participant will use the following inputs. Market participant will be using the following inputs to find out the fair value. Okay, now just tell me one thing. I have installed an asset which I have to decommission after 10 years. I've installed an asset which I have to decommission after 10 years. Should I create a provision for dismantling expense now only? Should I create a provision for dismantling expense now only? Answer is yes. So even though it's coming after 10 years, the provision for dismantling expense will be at present value. And sir, where will be the opposite effect? The provision credit debit effect, it's added in the cost of asset. It's added in the cost of asset, so indirectly it gets spread over a period of 10 years. Dismantling expense will get indirectly spread over a period of 10 years. We have to do provision for dismantling expense, yes, to be done at present value. Debit effect will be in asset. Okay, now let's see the question. A market participant will use the following input to measure this liability: labor cost. Labor cost, and see there is one clear word written, based on current market wages. Labor costs are developed based on current marketplace wages, adjusted for expectation of future wage increase required to hire contractor to dismantle. And the wage cost which we are thinking, the labor cost which we are thinking is, outflow after 10 years may be 100 crore, maybe 125 crore, maybe 175 crore. Okay, three options possible. Should I take 125 jiska probability is highest? Should I take 125 whose probability is highest? No sir. No sir. If there are two options, you can choose basically the most likely method. If there are two options, you can choose most likely. If there are three options, we have to go for expected value method. So 100 into 25%, 125 into 50%, 175 into 25%. Find out that way. This will be the labor cost. Now overhead. Overhead cost will be 80% of labor cost. Fine. So pehle find karo labor cost, add overhead cost. And the compensation that market participant will require. See, any contractor which you will hire, would he work for free? No sir. He will have his own profit also added. So we feel that he will add a markup of 20%. And see, we are not going to do ourselves. We are going to hire a contractor. For us, the cost will be labor cost, overhead cost, plus whatever margin he takes. Add that also in the cost which you expect. Add 20%. And now this is what we are expecting. This is the cost what we are expecting. Is it possible the cost actual may turn out to be different? Is it possible the cost actual may turn out to be different? Yes, sir. If there is a risk adjustment given, we consider the risk adjustment also. The risk that actual outflow may be different, uska risk given is 5%. So overall, whatever cash flows coming will increase by 5%. Okay, effect of inflation on estimated cost and profit. These are cost profits today. Ye cost abhi ka hai. Today's value after 10 years is this. But now I need to consider inflation also. So whatever you found out, it's today. After 10 years kitna hoga? That we'll find out the inflated value. We'll come back to this point again. Okay, now the provision will be done. At the future value or the present value? Provision will be done at a future value or the present value? Sir, present value. So can I say I need to discount it? Discount ke liye, I need the discounting factor. For discount, I need to take a discounting factor. Discounting factor will be based on entity ka borrowing rate. Discounting factor will be based on that entity. वो entity का borrowing rate क्या है? Now they're telling the risk-free rate is 5% and the risk relating to the entity is 3.5%. Risk-free rate is 5%, risk relating to the entity is 3.5%. So can I say that entity can borrow at around 8.5%? Risk-free rate in market is 5%, but entity can borrow it around 8.5%. So discounting rate will be 8.5%. Did you understood this? Did you understood this? Discounting rate will be 8.5%. See, discounting rate, my entity kya rate pe I can borrow. At what rate I'll be able to borrow? That is the rate basically it should be used for discounting. I cannot use only risk-free rate. I cannot use only risk-free rate. ठीक है? 8.5% say it will be discounted. We are required to find out the fair value of this liability. Okay, let's go to the solution. Let's go to the solution. I'll just bring my calculator. 1 minute. Now, labor cost, there were three options available. 100 crores, 25%, 125 crores, 50%, and some 175 crores, again 25%. We take the expected cost. If you just see the working below, the labor cost, 100 into 25%, it's 25 crores. 125 into 50% is 62.5 crore, and 175 into 25%, labor cost is 131.25. Okay with this? Okay, the labor cost 131.25, overhead cost will be 80% of labor cost, just 80% kiya hai. Now, we are not going to do ourselves, we are going to get the work done from outside. We are not going to do the ourselves, we are going to get it done from a contractor, and contractor will add his profit. His margin is 20%, so 131.25 plus 105, total jo aaya, uska 20% markup. Whatever total cost will come, uska 20% markup. Markup is always on cost. So cost pay plus 20%. This is the markup. Did you understood this? Now, these are the expected cash flows which are there before inflation. These are the expected cash flows which are there before inflation. Now, sir, that wo risk factor 5% tha na? Like expected cash flows and actual cash flow may be different. Uska 5% risk factor you can take now also, you can take later also. Now this is the cash flow as per today's term. Now tell me, actually the cash flow will come after how many years? Actually the cash flow will come after how many years? So 10 years. After 10 years. So what do I do? I need to multiply this with into 1.04 into 1.04 into 1.04 into 1.04 10 times. So 283.5 into 1.04 into 1.04 into 1.04 into 1.04 into 1.04. Do it for 10 times. 6, 7, 8, 9 and 10. You will get it as 419.65. You will get it as 419.65. Did you got 419.65? Okay, so this is adjusted for inflation. It becomes 419.65. This is the cash flows which will come afterwards in future. Plus wo risk factor 5%. Risk factor 5%. So cash flows now we are expecting is 440.63. So we feel actual maybe more हो सकता है तो एक extra 5% cushion डाल देते हैं. That's kind of 5% cushion which we have kept. So we are expecting a cash flow of 440.63 which will come after 10 years. 440.63 which will come after 10 years. Discount it at your borrowing rate 8.5%. Discount it at your borrowing rate 8.5%. So now after 10 years 440.63 to be paid. After 10 years 440.63 to be paid. After 10 years 1 divided by 1.085. 10 years के बाद है तो 10th year का take it 1 2 3 4 5 6 7 8 9 10 10th year PVIF into 440.63. 10th year PVIF into 440.63, it will come as 194.88. Now Mohit has a question, sir, why risk adjustment after inflation? Mohit, inflation is normal which you are expecting, वो तो सबको normal है. But we feel the actual cash flow may be more. हमने सोचा है उससे it may be more. And that's why whenever you're doing fair value determination, you can take a risk adjustment as well. So on a safer side, we have taken 5% cushioning. So that's why that cash flows outflow expected is not 419 plus 5%. Did you understood, Mohit? Inflation is normal. वो तो यार, today we are expecting this. Inflation के कारण it will grow to this. But now what we estimated and actual may be different. What we estimated and actual may be different. Our estimate may be wrong. So risk factor is basically considered for kind of, if your estimate goes wrong, you have some cushion basically. For that it is there. We have a similar question in our Ind AS 113. Risk adjustment 5% is there. We had a question, material 30 lakh plus they say that risk factor 5%. The outflow was 3150. In our material, similar question is there. But yahan pe they have 2-3 more points. Our question had only that point. Any doubts? Anybody with this fifth question? This was one of the important question of this RTP. Okay, moving to the next question, sixth. Moving to the next question, question number 6. It's Ind AS 20. It's Ind AS 20. Ind AS 20, government grant. Now, you are conducting business in a backward area and due to higher operating cost, you are incurring losses. See, backward area, roads, boards are not good. Roads are not good. So, you have a lot of transportation cost. You're a bit far. People charge a higher rate. Even rickshaw wala charges a higher rate. So what happens is you have a higher operating cost and because of that, you're having huge losses. So that losses scheme of government came out. They'll partially compensate your losses and they will pay you 10 crore rupees. Okay, you are operating in a backward area. Government is now going to give you 10 crore rupees, which will be received in October 2002, which will be received in October 1, sorry. It meets government grant definition. No conditions are attached. No other conditions are attached. Now I have a question. As per Ind AS 20, government grant is recognized when to recognize government grant? It is reasonable that you will be able to comply with the condition and the government grant will be received. There's a reasonable assurance. That you will be able to comply with the condition and grant will be received. So yahan pe grant we feel will be received in October. That is fulfilled. And there are no conditions. So we can record government grant. And as per Ind AS 20, government grant always goes in P&L over the period in which the expense to fulfill the conditions will come. It will always go to P&L over the period in which the expense relating to fulfilling the conditions will come. Tell me, do we have any conditions attached? No, sir. The expense relating to fulfilling condition will not come in future. You can book this immediately in P&L. October 21 May, you can book it in P&L. Did you understood? Full in P&L, you can book it right now. Let's go to the solution. Ind AS 20. Now see, if you check out, they are not just giving answer, they are giving theoretical sentences. Marks are not for conclusion, marks are for writing these theoretical sentences. If you feel that, sir, I don't write theories, I directly write conclusion, conclusion ke marks nahi hai, theory has to be written. Conclusion write 1 mark, other things 4 marks. Okay, as per Ind AS 20, a government grant may become receivable by an entity as compensation for expense or loss incurred in past. Such grant is recognized in P&L in the period in which it becomes receivable. You have to put it in P&L in the period in which it becomes receivable with some disclosure so that people are able to understand the effect. Okay. Accordingly, what will happen? A Limited should recognize a compensation receivable by it as a government grant in P&L for the period in which it becomes receivable. This year only fully with disclosure so that people are able to understand the effect. Yes, no? Yes or no? Okay, next question. Next question, question number 7. Now, question 7 is on leases. Question 7 is on leases. Okay, I have a few questions first. Variable lease payment which are based on rate or index. Variable lease payment which are based on rate or index. Inflation से linked है या some CPI index, consumer price index they are linked. Are they included in your lease payment? Variable lease payment which are based on rate or index, are they included in the word lease payment? Yes, they are included in lease payment. But variable lease payment which are not based on rate or index, like based on sales, some percentage I'll give you lease rental, that is not included in the word lease rental. That's not included in the word lease payment. Okay, the variable which are based on rate or index are included. Now, question. Do we try to forecast the inflation rate or CPI index ka rates of future while finding lease liability? Lease liability is whatever lease payments are to be done, uska present value. Lease liability is whatever lease payments are to be done, the present value. So now, do I try to forecast future inflation ke rates or future CPI indexes? Answer is no. Answer is no. We don't forecast future. So they are included in lease payment based on current CPI index. They are included in lease payment based on current CPI index. Suppose later on inflation rate or CPI index changed. Suppose later on the inflation index or CPI index is changed, then we have to remeasure the lease liability. Then we have to remeasure the lease liability. Did you understand this? So lease liability in your books is based on the lease payment which we have to do based on current CPI index or current inflation rate. If inflation rate or CPI index changes, the lease payments will change. The lease liability, you have to remeasure it. You have to remeasure the lease liability. So there was a concept of remeasurement of lease liability. Now there were various options. One is when the CPI index or rate changes, you have to remeasure the lease liability. Second, earlier you feel he will not go for renewal. Now we feel he will go for renewal. The term changed. Earlier you felt he will not go for renewal. Now we feel he will go for renewal. But then again, lease liability is remeasured. Earlier you felt he will not go for purchase option. Now you feel he will go for purchase option. Again, lease liability will change. Now, question over here is, when I'm remeasuring a lease liability, should I find the new liability discounted as per original rate or a new rate? Should I find a lease liability discounted as per the original rate or a new rate? That's a question. Now, pay attention. There are 5 cases where you do a remeasurement of lease liability. In out of 5, 2 cases may you use a new discounting rate, 3 cases may you use a old discounting rate. So which are the 2 cases where we use a new discounting rate? New rate is used under 2 cases, sir. Which 2 cases? One is if renewal was not certain, now it becomes certain, or termination was not certain, now it becomes certain. So that's change in term. The term may change aa raha hai. And second, purchase option was not certain, now it becomes certain. So these are the 2 cases where the lease liability is remeasured based on new discount rate. Otherwise, the lease liability will be based on old discount rate. You remeasure it, but considering old discount rate. This was important point of this question. Let's see. Let's see now. Lease agreement is there, 1st April 1 for 10 years. Rental is 56,000. Payable in arrears. Arrears means end of each year. So every year end 56, 56, 56, 56 I pay. You recognize a lease liability 351,613 at inception. So 56, 56, 56 payable for 10 years. तो उसका present value would have taken, and the incremental borrowing rate day 1 is 9.5%. So 1 divided by 1.095, 1 divided by 1.095 for 10 years equal to GT into करो 56,000, you will get your 351613. आपको मिल जाएगा 351613. ठीक है. Now, the lease rental shall be adjusted every 2 years to give the effect of inflation. I never took the inflation. I was basically having my rental as per current CPI index. If CPI index change, rentals will change. CPI index will change, rentals will change. Okay, so rent is to be adjusted every 2 years. Now, inflation was 280. And now after 2 years, it became 301. After 2 years, it is in 34. ये था 12 में. So can I say after 2 years, now it is 301. So can I say 56,000 was based on 280. 56,000 rental था, वो 280 index पे था. Now 301. So into 301 by 280, now your rental will be into 301 by 280, now your rental will be 60,200. Yes or no? Now, can I say this rental came up after second year, means from third year onwards, we have to apply this new rental. Third year onwards, I need to apply new rental. So next 8 years, third, fourth, fifth, sixth, seventh, 8, 9, 10. Next 8 years, I have to pay 60,200. Next 8 years, I have to pay 6,200. Now, sir, again after 2 years, it will change. We don't consider that right now. After 2 years, again inflation index will change. We don't consider that right now. So right now, we had 56,000 based on 280. Now it became 301. So rental will become 60200 from third year onward. Third to 10th year is 60200. Usko discount karo. The new rate today is 8%. Should I take 8% or should I continue 9.5? Should I take 8% or should I continue the 9.5 original one? Now, I told you new rate, remeasurement of lease liability, new rate is taken only under 2 cases, term is change or purchase option, whether exercised, not exercised. Here, this will be continued at an old rate only. Are you clear, Lakshmi? There were 5 cases when lease liability remeasured, 2 cases mein new rate taken, 3 cases mein old rate taken. This falls under old rate wale mein. Mohit, it will be 9.5%. Are you clear, Lakshmi and Mohit? You need to go back to your theory. Total lease liability remeasured under 5 cases. 2 cases may we use new rate, 3 cases may we use old rate. This is falling under that 3 cases where we use old rate. Okay, so let's go to the solution. Let's go to the solution. Currently you had a liability 351 on day 1. Day 1. Okay, is the lease liability remeasured on day 1 or at the end of second year? Is it remeasured on day 1 or at the end of second year? Sir, it's remeasured at the end of second year. So I need to first find what's liability in my books. What's liability in my books? We started with 351. We started with 351,613. Interest accrued at 9.5%. Interest accrued at 9.5%, and we have paid some rental 56,000. This is the closing. Again, interest accrued 9.5, we paid 56, this is closing. So can I say this is the liability in your books today? 304,273. This is the liability in your books today. We have to remeasure it. We have to remeasure it. Now, after 2 years, this is the liability in your books. Next 8 years, are you going to pay 6,200 or 56,000? Next 8 years, are you going to pay 6,200 or 56,000? So 60,200 now. So this is liability in books. Remeasure karenge. Now 6,200 for next 8 years. See, starting from 3rd to 10th, that's 60,200. 60,200 will pay. Discount it at a original discount rate only. Discounted at an original discount rate only, and see, we are at the end of second year. We are at the end of second year and this are at end of each year. And I just write we are at end of second year. If we are at end of second year, lease rental payable at the end of third year. Can I say it's after 1 year? We are at end of second year. So lease rental payable at the end of third year is after 1 year. So ये 1 year का PVIF है, first year का. ये second year का, third year का. Did you understood this? So now we are required to pay is 327. New liability is 327. 6,200 for 8 years. New liability is 327. What is the old liability in books? 304. 304 old liability, new should be 327. Difference. Whenever there's a remeasurement of lease liability, where does the difference go? Whenever there's a remeasurement, where does the difference go? Does the difference go in P&L or is the difference adjusted in ROU asset? Is the difference going in P&L or is it adjusted in ROU asset? Chalo, fast. Difference go in P&L, is it adjusted in ROU asset? Sir, it's adjusted in ROU asset. ROU asset. So check out the difference will go. Difference 22854, increase in lease liability, corresponding increase in ROU asset. Done? Next one. This was 7th going to 8th. 8th is a very simple question. You have just EPS to be calculated. Options were there. There were some options there. Options में क्या होता है? Options में क्या होता है? We give at below market price. ESOPs kind of thing. We give at below market price. The number of shares which are to be given for free, they are considered. Number of shares which are to be given for free, they are considered while finding diluted EPS. Okay, if you check over here, profit is 12 lakh. Weighted average share is 5 lakh. So your basic EPS is 12 lakh divided by 5 lakh is 2.4. Basic EPS is 12 lakh divided by 5 lakh, it's 2.4. Now diluted EPS mein, there are options 1 lakh shares ke. And we will give them at 15. Average price during the year is 20. So see, I will be getting on 1 lakh share 15 rupees. I'll be getting on 1 lakh share 15 rupees, 15 lakhs. If I would have given shares at market price for 15 lakh rupees, I would have given them for 15 lakh rupees, I would have given them divided by 20, 75,000 shares. So how many shares I'm giving for free to them? They gave me 15 lakh rupees, I'm giving them 1 lakh share. If I was giving them shares at market price, I should have given 75,000. The shares given for free is 25,000. They are included while calculating diluted EPS. So diluted EPS, numerator will be same, denominator is 5,25,000 shares. Very simple. We already done such type of questions in classwork. Going to the next one, 9th. Going to the next one, 9th. Okay. We have a term loan of 620 lakhs. We have a term loan of 620 lakh, which is for renovation modernization taken on 1st April. And the renovation got completed on 30th April 2 next year. Can I say after 13 months? So we have a term loan and we took a loan for this renovation purpose 1st April 1 and it got completed on 30th April 2. Total 510 lakh were installation of plant and machinery. 54 lakh was advanced to supplier for some additional assets which was acquired on 25th April 1 and installed on 30th April 2 and balance 56 lakh used for working capital purpose. Now, Nika Limited considers 12 months time as substantial period of time to get asset ready for use or sale. Okay, you have 13 months time. Is it a qualifying asset? Your renovation took 13 months time. Is it a qualifying asset? Yes. If it's a qualifying asset, the borrowing cost relating to it can be capitalized. Now, total 620 lakh, how did we use? Total 620 lakh, how did we use? 510 lakh was incurred for installation. Another 54 we had given advance for some additional asset which were also installed later. which will also installed at end. We gave advance in April 1, installation happened in April 2. And balance 56 lakh is working capital ke liye. Okay, can I capitalize the borrowing cost on the money used for working capital? No, so ispe I cannot capitalize. The first two, this 510 lakh and this 54 lakh, these are used for construction of a qualifying asset. But this is not used for a construction of qualifying asset. 54 lakh is not used. 56 lakh is not used for construction of qualifying asset. Okay, total interest was 68.2. Can I say the 68.2 was on 620? 68.2 is on 620. Okay, I cannot capitalize on this 56. 56 pay I cannot capitalize. So I do one thing. 68.2 is for 620. So for 56 it will be how much? Into 56 by 620, 6.16 you cannot capitalize, remaining you can capitalize. 6.16 you cannot capitalize, remaining you can capitalize. Did you understood? Now, would your answer be different? Would your answer be different if the whole process got completed by 28 Feb? If whole process got completed by 28 Feb, can I say whole process is less than 12 months? Whole process is less than 12 months, then nothing is qualifying asset. Nothing can be capitalized. Nothing is qualifying asset, nothing can be capitalized. So check the solution. Okay, if asset is completed on 30th April, so I can capitalize on this first one, second one. The 6.16 goes to P&L, it cannot be capitalized. 6.16 goes to P&L, it cannot be capitalized, which is relating to working capital. Okay, if the overall project got completed by 28 Feb, the whole of interest will be going to P&L because it is not a qualifying asset. Whole of interest will go to P&L because it's not a qualifying asset. Shall I move ahead? Okay, next question. Okay, you purchase a franchisee right from a restaurant chain. कोई restaurant chain है McDonald's. You took a franchisee of McDonald's for 1 CR. You took a franchisee of McDonald's for 1 CR. Can you show that 1 CR franchisee right as an intangible asset? Can you show 1 CR franchisee right as an intangible asset? Definitely. Intangible asset is an identifiable non-monetary asset without physical substance. ये सब theory लिखना है. It's an identifiable non-monetary asset without physical substance. When do I say it's identifiable? It's identifiable when it meets either a legal contractual criteria or a separability criteria. Either it meets a legal or contractual criteria or a separability criteria. Legal contractual criteria means it arises out of a law or it arises out of a contract. And separability criteria, it's capable of being sold, rented, exchanged to someone. So here, franchisee right arises out of contract. It fulfills legal or contractual criteria. As it fulfills legal or contractual criteria, it's a identifiable thing. It's a non-monetary asset without physical substance. And now we expect future economic benefit. Can you record it? Answer is yes. So is it an intangible asset? Yes. Is it an intangible? Yes. Now question, can I record it as intangible? See, there is a difference between being intangible and recognized as intangible. For recognition, there are two criteria. It is an intangible now. Can I record as intangible? Two criteria. One, future economic benefit should flow and cost should be measured reliably. Future economic benefit should flow and the cost should be measured reliably. That all theory needs to be written. Check the answer given. Okay, the one they've given a definition of intangible asset. So first they've written asset ke baad they've written intangible, and then they will say that it is a intangible asset. It meets the definition of intangible asset. It can be recognized if recognition criteria are met. Which are the recognition criteria? Two, probable future economic benefit will come and the cost can be measured reliably. Did you understood this? Don't think theories are not important. Many time you feel sir वो छोटा chart दे दो sums कैसे solve करने, वो charts will not work. You need to understand theories properly. In our material we have highlighted all important theoretical sentences properly. That has to be revised during exam day. जो highlighted points in our material, if you revise, that's more than sufficient. Next one, 32. Next one is Ind AS 32 or Ind AS 109, convertible debentures. Okay, you have issued some 6,000 convertible debentures. You have issued some 6,000 9% convertible debenture 1st April को, maturing after 5 years, 06. April 1 में issued, March 6 में matured. Okay, April 1 में issued, तो March 2, March 3, March 4, March 5, March 6, 5 years. Okay, conversion price is 105. I have a question. They are convertible into equity share at a conversion price 105. Upon conversion, one equity share is issued at 105. Same ditto question is there in our material. Same question, same figures. Okay, so they are convertible at 105. So means one share is issued upon conversion at 105. Question: are debentures redeemable at premium? Are these debentures, can I say they are redeemable at premium? Are this redeemable at premium? Answer is no. No. Preference shares, so debentures are not redeemable at premium. It's just that the shares will be issued at premium if someone wants to convert it. Shares are convertible at one. If you want a shares, one share is issued at 105. I'm going to give you total 6 lakh rupees only. 6 lakh divided by 105, I'll give you lesser shares. Debentures are not redeemable at premium. Is it clear, Lakshmi? Okay. Interest is payable annually in cash. Interest will be paid in cash. And similar non-convertible debentures ka rate is 13%. See, ours is convertible. I gave you one extra benefit of conversion. I'll give you lesser interest. Ours rate is 9%. But our non-convertible one available in market is 13%. Now, can I say it's a compound financial instrument? Whether the holder will go for conversion or not go for conversion, I don't know. Holder will go for conversion or don't go for conversion, I don't know. So what do? I treat it as a compound financial instrument. Now, how do I find liability component, equity component? Liability component is whatever I have to pay assuming he goes for cash. Whatever I have to pay assuming he goes for cash, discounted by a normal discounting rate 13%. 13% से discount करो. Okay, so I just go to solution, then I'll come back to question. Okay, I have to pay him yearly interest. What I have to pay him? 6 lakh ka 9%, 54,000 interest. Interest payment 54,005. We discount at 13%. So 54, 54, 54, 54, 54. 5 years pay करना है. उसका discount करते हैं. And 6 lakh I need to pay at the end. 6 lakh I need to pay at the end of 5th year. That is discounted. So this is the liability component 515. 515 is the liability component. Balance 84,282 becomes equity component. Did you understood this? And they've clearly written a note. 105 is conversion price. Debentures are not redeemable at premium. We have to redeem them at par only. Conversion price. If they want shares are issued at 105. Okay, so this is the scenario. Now let's go back to the question. Now on 1st April 4, can I say after 3 years? 1st April 4, after 3 years, the convertible debenture has a fair value 630 and you repurchase this from your shareholder at 630. Okay, the convertible debentures are repurchased at 630. Now can I say that when convertible debentures were issued, something was towards liability component, something was towards equity component, something was towards liability component, something was towards equity component. Now when you repurchase them, what you are paying? is also to be bifurcated. When you repurchase, what you are paying is also to be bifurcated, something towards liability component, something towards equity component. Did you understand? So 630, what I'm paying, I need to find out how much is for liability component, how much is for equity component. Reason: in your book there is some liability, there's some equity. In your book there is some liability, there's some equity. Now you pay something for liability component, something for equity component. So in liability component, if I pay more or less, that goes in P&L. In equity component, if I pay more or less, that goes in equity. So that's why I need to find how much out of 630 is towards liability component, how much out of 630 is towards your equity component. Tell me, how do we find how much out of 630 is liability component, how much is equity component? See, whatever we have to pay now onwards, discount by today's discount rate. Okay, we are on 1st April 04. So 4 end, 5 end, 6 end, I have to pay interest. 4 end, 5 end, 6 end, I have to pay interest, and 6 end pay I have to give a cash of 6 lakh. So 54, 54, 54 and 6 lakh. These are pending discount at today's discount rate. Today's discount rate is 10%. This is what I'm paying for liability component. Out of 630, whatever this figure comes, this is for liability component. Balance is for equity component. Okay. Now pay attention. So how much I'm paying for liability component? 54, 54, 54. Okay, 2004 first को decide किया ना. Okay, 1st April 2004 को decide किया. So now interest will come in March 5 and March 6. Only 2 years interest is pending, not 3 years. 1st April 4. So March 4 interest is already paid. 1st April 4 को it's decided. So March 5 interest, March 6 interest. 2 interest are pending. So 2 interest of 54,000. 2 interest of 54,000 and 6 lakh after 2 years. And you will have a 6 lakh which is after 2 years. Discount by the new rate. So liability coming is 589. So you paid 589 290 for liability. Did you understood? We have a same question in our material with same figures. So now when I am redeeming, when I am buying back that convertible debenture, something is towards liability component, something towards equity. What is liability? Liability simple hai. What is pending? Discount it at today's rate. This is for the liability component. The liability component I am paying is 589. Total I paid 630. This is the balancing one which I paid for equity. So 589 I paid for liability component, total I paid 630, balancing 40,710 is for equity component. Did you understood? And these are the liability and equity component in books. This is book value. This is the book may value. And this is what we paid for it, and difference is profit or loss. This is gain or loss. Okay, now tell me, liability in your books is 559. Sir, 559 kaise aaya? Do one thing, start with the initial liability. Or originally interest accrued, we paid something, closing. Interest accrued, we paid something, closing. Interest accrued, we paid something, closing. You'll find this will come 559. The original liability in books today. Is 559. How much we paid for liability? 589. Did you pay more or less? Liability in books is 559. We are paying 589. We paid more. There's a loss coming on payment. 29,418. Okay, equity component in book is 84. You are paying 40,000. There's a profit coming over there. Now, why do we need to find this two separately? The reason is, in liability component, if you pay more or less, it goes to P&L. In equity component, if you pay more or less, it goes to directly retained earnings, or you say other equity. Okay, so now check. In your book, liability component was 559, it goes away debit. And you paid 589, difference goes in P&L. In your books, liability was 559, you paid 589, difference goes in P&L. In your books, equity component was 84, it goes away. You paid 43, difference. So you paid 40, difference goes in retained earnings. Difference goes in retained earning. Liability component, if I pay more or less, it goes where? कहाँ जाता है? P&L में. But equity component, if I pay more or less, it goes in retained earning. That's why out of 630, what you pay, you have to find how much is for liability component, how much for equity component. Clear or not? Similar question we have in our material. Going back, question number 12. Index 101. Again tell you, this RTP with this marking is already put up on my Telegram channel. You can take it from there. Telegram channel ka name is CA Niket Thaker. Just search in Telegram CA Niket Thaker. You'll find out the Telegram channel. Usme this RTP with marking is there. It becomes easier to finish up faster. Okay, question 101. Whenever you're transiting while preparing an opening balance sheet, entity is required to. Okay, this is 101 ke general sentences. The general principles. Recognize all assets liabilities whose recognition is required by Ind AS. Recognize all assets liabilities whose recognition is required by Ind AS. Reclassify the item if it is required by Ind AS. Like I tell you, simple. In your AS accounting standard, your debentures were fully, or preference shares were part of capital, yes or no? In your accounting standard, the preference shares were part of capital, but under Ind AS, the redeemable preference share will come as a part of liability. Reclassify what is required. And third, apply Ind AS in measuring the assets and liability. So now measurement should also be as per Ind AS. So this is general thing. Record all assets and liabilities required as per Ind AS. Reclassify the items which is required as per Ind AS. And now you measure the things. Value should be based on Ind AS. Give examples of all of them. Second one, I already told you, preference shares. Earlier, preference shares were part of capital. Now, preference shares will be part of liability. Reclassify. Okay, third one, apply Ind AS in measuring. All recognized assets and liability. Now, tell me one thing. You had some business combination done earlier. If you had done a business combination, in your business combination, AS mein, your contingent liability becomes my contingent liability. AS mein, your contingent liability becomes my contingent liability. But Ind AS mein, if at all a contingent liability is coming, we recognize at acquisition date fair value. Karte hai ki nahi? We recognize at acquisition date fair value. Do we do that or not? Yes, sir. Same way, another example of measurement is DTA ka recognition. DTA recognition. In your accounting standard 22, AS22, DTA is recognized when your virtual certainty profits will be there in future. But under Ind AS 12, DTA is recognized when it's probable that future profits will be there. Wahan pe word was virtual certainty, here the word is probable. So can I say it is possible DTA was not recorded under AS because virtual certainty was not there. But Ind AS mein it is recognized because probable that future profits will be there, that probable is there. So these are examples which we are required to give. Three things. Once 3 things. 1. Recognize all assets liabilities whose recognition is required by Ind AS. So something not there in AS but should be there in Ind AS, uska example. Second, reclassification required. And third, measurement. Wahan pe AS mein different hai, Ind AS mein different hai, uske examples. Let's check the solution. For the first one, record what is not. The one example they've given is deferred tax. I already gave you example of it. One example is deferred tax. I already gave you example of it. Wahan pe word was virtual certainty. Here the word is probable. So virtual certainty was not there. Deferred tax was not recorded. In DS mein, probable future benefits are there. You can record word basically DTA. यहाँ पे reclassify में the preference shares were part of capital earlier. Now they are part of liability, redeemable ones. And third wala example, apply Ind AS in measuring all recognized assets and liabilities. Apply Ind AS in measuring all recognized assets and liability. Measurement of deferred taxes. Okay, earlier it was deferred tax was on timing difference. Now there's nothing like timing difference in Ind AS. The word is temporary difference. The measurement should be based on temporary difference. Plus one more thing I tell you. Business combination. Business combination, if amalgamation happened under AS, assets liability come at different value. Business combination, assets liabilities are coming at acquisition date fair value. DTA, DTL was not recognized under AS. DTA, DTL is recognized under Ind AS. So these are few examples which were asked. So a theory question was there. I told you now it's not just a practical paper. Lots of theories are to be written, that too properly. Practical question also has some theory which is to be written properly. Next question, Ind AS 105. 105 is non-current asset held for sale. Non-current asset held for sale, discontinued operation. 28th February, you are committed to following plan. You want to sell a property after completing certain renovation which will take 2 months. After completing certain renovation which will take 2 months. Now, for an asset to be classified as held for sale, two criteria were there. One, it should be available for immediate sale. It's available for immediate sale. Immediate sale, it's available, and the sale is probable. And it's highly probable. Sale is highly probable. Ho jayega sale. Within 1 year, the sale will be there. Highly probable. Immediate sale, it is available, and sale is highly probable. Now tell me, if I have to do some renovation, is it available for immediate sale? If I have to do some renovation, is it available for immediate sale? Answer is no. It cannot be classified as non-current asset held for sale. Second, you want to sell off a building after the occupant vacates the building. Okay, so you are occupant. After you vacate, then you will be selling. You sell a building to a buyer after occupant vacates the building. Now pay attention. The time required for vacating is usual and customary. Sir, आप sale कर दो, कल खाली कर देंगे. आप sale कर दो, आपका sale हो गया. Next day I'll empty it. The question, is it available for immediate sale? The time required for vacating is usual and customary. If you sell it off, tomorrow I'll empty it. Sir, don't worry about it. Is it available for immediate sale? Answer is yes. The first one is not available for immediate sale. Second one is available for immediate sale. First one cannot be classified as non-current asset held for sale. Second one can be classified. Let's go to the solution. So it cannot be classified. It's not available for immediate sale. Now your word immediate sale is lacking in your answer. Marks are not there. Second, criteria for being available for immediate sale would be met and it can be classified as held for sale. This was 13th going to 14th question. This was 13th going to 14th question. Okay, 14th question. You have 3 items: software, hardware, accessory. You have 3 items which you sell: software, hardware, accessory, and the standalone prices are given to you. Hardware and accessory की demand is low, so you sell prime cells H and A together at 1 lakh. Okay, what is SSP of standalone selling price of H and A? What is SSP of H and A, sir? 120. SSP of H and A is 120. You sell them together at 1 lakh. So can I say H and A are sold together at 20,000 discount? H and A are sold at 20,000 discount. ठीक है. Now you enter into a contract to sell all three at 150. You're selling all three together at 150. A contract आया all three together at 150. Normally H and A are sold at 1 lakh rupee 20 discount. Okay, now just tell me one thing. All three together, the SSP is coming 170. Contract is to sell at 150. The discount is 20. Should I allocate discount between all three? Should I allocate the discount between all three based on SSP? Normally it's like that. But here there is a hint. There's a hint that normally we sell HNA at 20,000 discount. The full 20 discount is only related to HNA only. Even though S is there, we have not given any extra discount. The full discount will be borne only by H and A. Full discount will be only by H and A. Similar question is there in our material. Okay. So treatment of discount, how it is to be given? Only between H and A. Okay. Okay, going to next question, question number 109. Sorry, question number 15, Ind AS 109. Ind AS 109. Okay, entity A owns 250 ordinary shares. You have some 250 shares in a company XYZ, which is an unquoted company. Unquoted company. 250 shares, and they have a total capital 5,000 shares. Okay, out of 5,000 shares, I hold 250 shares. Tell me, how many percentage? Out of 5,000 shares, I hold 250 shares. Can I say it's just 5%? It's just 5%. It's neither subsidiary, nor associate, nor JV. It's just a normal investment. And as per your Ind AS 109, your normal investment equity are always FBT P&L, except you choose an irrevocable option, they can be at FBT OCI. Equity investments are always FBT P&L unless you choose an irrevocable option, they can be at FBT OCI. So can I say I need to fair value them every year? Okay, now it's unquoted. Would I get the market price? It's unquoted. Would I get the market price? No, sir. The fair value I have to find by some other ways. Let's see. Now, the profit estimated is 70,000 per year and P ratio industry data के हिसाब से similar company P ratio is 15. Similar company, the P ratio is 15. So can I say total value of company 70,000 into 15? Total value of company 70,000 into 15, but that is P ratio of some listed company. Yours is unlisted. Would people give you same valuation? Listed company का P ratio 15. Would people give same valuation for unlisted? No, sir. Unlisted में marketability is not there. I cannot sell the share when I want. Listed में I can sell the share when I want. So they will give me bit less. They will pakka give me bit less valuation. So how much is the valuation? Discount for lack of marketability is 20%. Discount for lack of marketability is 20%. So my valuation 70,000 into 15 nahi aayega, minus 20%. So my valuation is, can I say 8,40,000? It is 70,000 into 15, jo aaya minus 20%. 8,40,000. 8,40,000 is for 5,000 shares. So do one thing, divide by 5,000. Per share valuation is 168. Per share the valuation is 168. You hold 250 shares. The fair value 42,000. Check. Just a minute. कहाँ गया भाई, जल्दी आजा. Okay. So the valuation coming is 8,40,000 and 8,40,000 is for 5,000 shares. Per share is 168. We have 250 shares. Our valuation becomes 42,000. Our valuation becomes 42,000. Next one. Second case, okay, assume we are going for net asset valuation. We are not going profitability valuation. We go by net asset valuation, and the fair value of net asset is 850. Fair value of net asset is 850. This will include everything. Some assets were recorded, not recorded, whatever. The fair value of your net asset is 8,50,000. So can I say 850 divided by 5,000 per share value is 170 now? No adjustment to be done here. No adjustment to be done here. Wahan pe adjustment 20% was done because we are using a P ratio of a listed company. Because you're using a P ratio of a listed company. Here you're not using P ratio of listed company. So here 850 divided by 5,000 per share valuation 170. You hold 250 shares. 42,500 will be the value. So 170 and 42,500 will be the value. Any doubts? Question number 15. Next one, 16th. Next one, 16th. Okay, we want to find NRV of inventory. We are determining NRV of inventory. While determining NRV of inventory, cost of completion of WIP. The cost of completion, do I consider while finding NRV of inventory? How do I find NRV of inventory? Estimated selling price of finished goods. It's estimated selling price of finished goods minus estimated cost to complete the product minus estimated cost to sell. So estimated selling price of finished goods minus the estimated cost to complete the product minus the estimated cost to sell. Do I deduct this? Answer is yes, this will be deducted. This is deducted. Okay, second one, trade discount expected on sale. Trade discount expected on sale. This is deducted while finding the expected selling price only. I know 100 rupee trade discount 10 hoga. So would I take expected selling price 100 or would I take expected selling price 90? Would I take expected selling price 100 or would I take expected selling price 90? Sir, 90. So this is also considered. So this is considered. This is considered. Cash discounts are not considered. Cash discounts are not considered. So this is deducted in expected selling price only. This is deducted in expected selling price only. Cash discount is not deducted. Next, question number 17. Next is question number 17. Now, while preparing interim financial statements for half year ended 30th September 2, you found out you are preparing an interim financials, you found out an error related to last year. You don't want to restate the prior periods right now because you feel correction will be done in annual financials. Okay, so in September 2, half year ended September 2 when you were preparing, you found out September 1 wale period mein there is error. September 1 wala period means the annual accounts of last year also is wrong. Now, you are not trying to restate the previous information. You are telling that the restatement will occur at year end only. Okay, now first question. Whenever I have an interim financial statement, how do we give the previous year figure? Okay, so we have a half year ended 30th September. So can I say it is 1/4/2002 to 30th September 2002? This is current period. I have to give a previous period 1401 to 30th September 01. I have to give this period also. Corresponding figure. Now, there is some error related to this period. So when I am presenting comparative, do I need to restate the comparative? When I am presenting comparative under interim financials, do I need to restate the comparative. So whether this comparative needs to be restated, answer is yes, it has to be restated. Don't wait for the annual accounts. When you are preparing this interim financials, the interim previous period, if there's an error, that needs to be restated. That needs to be restated. Okay, so that was the question, whether it is to be restated. They say they are not required to restate. It will be restated while preparing annual accounts. Is it acceptable? Answer is no. Come to question 17 ka solution. 16th we already did. WIP wala, cost of completion, they are deducted. Trade discount, they are deducted. Cash discount are not considered. Again tell you, this marked things RTP, if you want, it's there on my Telegram channel. This can help you to finish off the RTPs faster. No need to do everything, you can just read the highlighted things. Okay, now as per Ind AS 8, entity shall correct the material prior errors retrospectively in the first set of financial statement approved for issue. Whichever financial statement you are preparing, after you found out the error, uske next wale financial mein it should have been restated. Now next wale financial doesn't mean annual financial. Financial can be interim also. If next interim financials are prepared and I know there was error, I should have rectified it. So if you just go down, in view of above, entity is required to correct the error and restate the previous amount in the interim financial statement. Is it clear? Let's go to question 18. Question 18, it's again a new type of question. It's basically there in our material, but it's newly added by ICI. Okay, we have a non-investment company. Praja Limited. Okay, P Limited, a non-investment company, is a parent of Praja Limited. P Limited, a non-investment company, is a parent of Praja Limited. You are a non-invest company, you are a parent of some Praja Limited. Now, in your SFS, you are having fair value through OCI. Now, just tell me one thing. I have an investment in subsidiary. They can be carried either at cost or as per 109. Either at cost or as per 109, and as per 109, it's either FVT PNL or FVT OCI. We have at FVT OCI. It is recognized at FVT OCI. 1st April, you become an investment company. 1st April, you become an investment company. Now, if you become an investment company, now you have to value your investment in subsidiary at fair value through PNL, because वो आपका routine business हो गया. Doing investment is a routine business. So earlier it was FVT OCI, now it should be FVT PNL. Earlier it was FVT OCI, now it should be FVT PNL. Did you understood this? Earlier it was FVT OCI, now upon becoming investment company, you should value the investments at FVT PNL. Okay? Carrying amount is 8 lakhs. Carrying amount is 8 lakh. The fair value today is 10 lakh. Okay, so upon becoming investment company, you have to carry them at fair value through PNL. So do one thing, book में 8 lakh hai, fair value them again. 2 lakh difference, take it in PNL. The fair value it, 2 lakh difference, take it in PNL. Now I have a question. Earlier it was FVT OCI, now it becomes FVT PNL. Earlier it was FVT OCI, now it becomes FVT PNL. What should I do with the OCI balance accumulated in other equity? Earlier it was FVT OCI, we fair value, difference went in OCI. We fair value, difference went in OCI. So there's an accumulated balance related to OCI lying. You had recognized a OCI of 1 lakh. The accumulated balance of OCI lying is 1 lakh. I understood 8 lakh hai, now 10 lakh, so you fair value it, 2 lakh goes in PNL. That's okay. What about the earlier OCI ka balance? Previously recognized OCI balance lying in other equity. Uska kya karu? Treat it like investments are sold. Treat it like investments are sold. Now tell me, if there is a equity instrument fair valued through OCI. If there's an investment in equity shares, fair value through OCI, and suppose if that investments are sold, what happens to the accumulated OCI balance? What happens to accumulated OCI balance? Does it go to P&L? Does it go to retained earnings? Does it go to P&L? Does it go to retained earnings? Dear, investment in equity, if it is carried at fair value through OCI, difference went in OCI, it's an item not reclassified to P&L. OCI mein there were two things, reclassified to P&L, not reclassified to P&L. This is an item not reclassified to P&L. So when such investments are sold, that OCI balance goes directly in retained earnings, not in P&L. Did you understand? Okay, so over here, what should I do? This 1 lakh previously recognized in OCI, this will go directly to retained earnings. It's treated as if that investments are sold. And now 8 lakh is to be carried in books at 10 lakh. That 2 lakh difference will go in P&L, and now onwards also every time fair value measurement will go in P&L. That 2 lakh goes in P&L, every time fair value will go into P&L, but this 1 lakh previously recognized OCI, this is treated as if investments are sold. So this will go to retained earnings. Clear che? Okay, check the solution. So upon becoming investment company, now it should be fair value through P&L. The new carrying amount 10 lakh and 2 lakh goes in P&L. Now previously recognized OCI, it should be treated as if the investments are disposed. So it will directly go to retained earning. It is not transferred to P&L. Sir, why it is not transferred to P&L? Investment in equity is item not reclassified to P&L. Item not reclassified to P&L. It's an item not reclassified to P&L. That's why it will not go in P&L. It will go in retained earnings. Okay, the check over here. So carrying amount now will become 10 lakh. P&L mein went is 2 lakh. And your retained earning mein you have to transfer 1 lakh. It will be transferred. You may transfer it to some equity mein. I just write in bracket, it's retained earnings. You can transfer it in retained earnings. Are you clear with this? Then let's go to the next question. This was 18th going to 19th. Okay, 19th. Solar Limited holds 80% in Mars. So can I say Mars is your subsidiary? Solar Limited holds 80% in Mars. Can I say Mars is your subsidiary? Okay. Now, Solar holds 25% in Venus and Mars holds 30% in Venus. I hold 25% in Venus and my subsidiary holds 30% in Venus. So, can I say me plus my subsidiary together hold 55% in Venus? See, whatever decisions are to be taken, my subsidiary will take a decision what I say. So, for that 25 plus 30, 55%, the decision will be taken what we say. For this 55%, the decision will be taken in a manner what we say. And the decisions require a simple majority. Decision requires a simple majority. Can I say 55% is in my hands? Whether Venus is your subsidiary, whether Venus will be regarded as your subsidiary, you hold directly 25, indirectly via subsidiary 30%. So 25 plus 30, you hold 55. Would you be able to take the decision which you want? Yes. it is to be regarded as a subsidiary. How to account for this? This will be accounted as a subsidiary. Check 19th question solution. So you control and therefore you should consolidate it. You control and therefore you should consolidate it. That is your 19th question. 20th question. 20th question. You purchase a machine. You purchase a machine for 30 lakhs. Now pay attention. On 1st April 1. Now written down value on 1st April 6 is 1750. Okay, now tell me, you purchased on 1st April 1 for 30 lakhs. After 5 years, it's 1750. After 5 years, it's 1750. Okay, if I ask you, after 5 years, it's 1750. If I ask you, what's the accumulated depreciation? What is the accumulated depreciation? So 1250 is accumulated depreciation. Can I say 1250 is for 5 years? Can I say 1250 is for 5 years? So can I say annual depreciation is 1250 divided by 5? Annual depreciation is 250. Out of 30 lakhs, now it became 1750. So 1250 is accumulated depreciation for 5 years. So annual depreciation is 250. If I ask you what's the useful life? If I ask you what's the useful life? 30 lakh is the total value. We depreciate 250 every year. 30 lakh is total value. We depreciate 250 every year. The useful life is 12 years. That was not given. This was required. The useful life is 12 years. Did you understand useful life 12 years? Annual depreciation is 250. 30 lakh divided by 250. Useful life is 12 years. Now, you've done a revaluation upward 10% on 1406. You've done a revaluation upward 10% on 1406. Now question, if I do upward revaluation, can I say that goes in OCI? Carried as revaluation surplus in other equity? Carried as revaluation surplus in other equity? Okay, now I have a question. You have a revaluation surplus in other equity. Can you use revaluation surplus? Amount equal to additional depreciation may be transferred from revaluation surplus to retained earnings. Up to you. Amount equal to additional depreciation. Now you revalue, depreciation will increase. Depreciation full will go in P&L. Depreciation full will go in P&L. But amount equal to additional depreciation may be transferred from revaluation surplus to retained earning. And see the line written. See the line written. H Limited availed the option of transferring some of the surplus as the asset is used. What do you mean by this? They avail the option of transferring some of the surplus as it is used. Means as in when the years go, they use that much asset, that much proportionate revaluation reserve they transfer to retained earning. So simple word, amount equal to additional depreciation. Amount equal to additional depreciation is transferred from revaluation surplus to, I put a star here, I write at the top. Amount equal to additional depreciation is transferred from revaluation surplus to retained earnings every year. Did you understood this? This line has the meaning this. Now on 1st April 8, now you downward revalued by 15%. And now you re-estimated the life as 8 years. You re-estimated the life as 8 years. First time when there was a revaluation upward 10%, life is not changed. First time when there was upward revaluation, life is not changed. Now downward may, now the remaining life is 8 years. 31st December 10, you sold the machine for 935, depreciation is SLM, give machinery account. Only machine account is required. Let's go to solution. required to have machinery account. Now, machine was 30 lakhs. Machine was 30 lakh. First 5 years, we gave 250 depreciation. First 5 years, we gave 250 depreciation, 250 depreciation, 2750. 250 depreciation, 25 lakh. 250 depreciation, 2250. 250 depreciation, 2 lakh, 20 lakh. 250 depreciation, now it's 1750. Now it's 1750. I think till here it's clear. 1406. 1406 at 1750 now. Now upward revaluation 10%. Can I say add 175? Upward revaluation 10%. 175 added. Now depreciation will be 1750 plus 175. 1750 plus 175 divided by, out of 12 years, 5 years gone. Total life was 12 years. I explained you 12 years कैसे है life. Annual depreciation 250, 30 lakh था तो 12 years. उसमें से 5 years gone. तो can I say remainder is 7 years, 275. How did I got 275? It is 1750 plus upward is 175 divided by 7 years. Now depreciation is 275. Earlier depreciation was 250. What is additional depreciation? What is additional depreciation? 25. The 25 will go from revaluation surplus to retained earnings. Or revaluation surplus to retained earning. It will not impact machine. It will not impact machine. Depreciation is 275. Depreciation 275 goes in P&L also. Revaluation surplus may say 25 will go to retained earnings. Now this is the balance. Okay. Next year also 275 depreciation. This is the balance. Next year also 275 depreciation. This is the balance. Now balance is 1375. Now balance is 1375. Now there's a downward revaluation done. There's a downward revaluation done. Now tell me, upward revaluation, we take it in revaluation surplus. What do I do with the downward revaluation? 10%. 1375, not 10, 15%. 15%. Downward revaluation is 206250. There's a downward revaluation. Rupees 206250. Now, how do I account for the downward revaluation? To the extent balance of revaluation surplus available, debit that, extra debit P&L. To the extent balance of revaluation surplus available, debit revaluation surplus, extra take it in P&L. Now you had a revaluation surplus 175. You had a revaluation surplus 175. Out of that, additional depreciation 25 transferred in first year, 25 transferred in second year. Additional depreciation has been transferred to retained earnings 2 times. After revaluation 2 times, 2 years gone. So now the balance is 125. So downward revaluation is 206250. Sir, कैसे है 206250? 1375 का 15%. 1375 into 15%. Downward revaluation is this. Usme now take 25 gone. So this much debit to revaluation reserve. Excess goes in P&L. Excess goes in P&L. Now 1375 minus 15%. This you depreciate over 8 years. How did you got this? It's 1375 minus 206250 divided by 8 years. Remaining useful life is 8 years, so divided by 8 years. So now onwards depreciation is 146094. Now closing balance. Next year you gave depreciation, end May it is sold. Sold at end. Sold at end. So depreciation comes, we sold for 935, balance is profit or loss. Did you understood this? Did you understood this? Only point was additional depreciation. Amount equal to additional depreciation is transferred from revaluation surplus to retained earnings. Revaluation surplus, we don't have 175, it's 125 available. Next time downward, 125 debited to revaluation surplus, balance went in P&L. Now the last question, question number 1. We're done with all. Now the last question, question number 1. Come to question number 1, please. It's a bit bigger question, but it's easier. Question number 1. This was the most important. This is the most important. If you miss this, that's a problem. Other things were still simple in this RTP. This is the most important question of this RTP. Okay, you are in business of some exploration and development of oil and gas block. You hold a participating right in the following block. So there is one block, वो KG basin ऐसे होते हैं ना block जिसमें से आप extract करते हो सारी चीजें oil. So that block is held by 3 of you jointly. Company X, Company Y, Company Z, total. So what is your share in that block? You are Company X. You are Company X. What is your share in that block? 30%. What is your share in that block? 30%. Now it's an unincorporated joint venture. Now if you just recall, joint arrangements can be of two types: joint operation, joint venture. Joint arrangements can be of two types: joint operation, joint venture. If new entity is not created, it's always, if new entity is not created, it's always joint operation. If new entity created, mostly joint venture, but if certain criteria is fulfilled, still it can be joint operation. Okay, it's an unincorporated JV. It's an unincorporated. So whether new entity is created for this, answer is no. So it is a joint operation. And see, whenever it's a joint operation, in our SFS, leave CFS, SFS mein, in our SFS, we record our share of assets and liabilities related to this joint arrangement. In SFS, we record our share of assets and liabilities related to joint arrangement. So related to this block, our share of assets and liabilities are 30%. That will be there in our SFS only. Did you understand? It's a joint arrangement. उसमें joint operation है ये. It is joint operation. ठीक है. Now Z had some liquidity issues. Z defaulted in payment. Like suppose we are 3 partners. Okay, we have not created a new entity, but anything expense related to this combo, everybody has to contribute, everybody will share revenue. Z was having liquidity issue, he defaulted, and now Z decided to withdraw his right and entered into a sale agreement with X and Y. And as per the terms, X will receive 33.33% and Y will receive 66.66% of the rights owned by Z. Okay, what is the Z's right? 10%. Z's right was 10%. Now everybody had included their share of assets and liabilities in their SFS. It's a joint operation. X included his share of assets liability, Y included his share of assets liability, Z included his share of assets liability. Now the thing is, Z is in trouble. He wants to sell off his right. So his right 10%, who is purchasing his right 10%? X and Y. X and Y are purchasing. Sir, in which ratio we are purchasing? 33.33 and 66.67. So can I say 10% ka 33.33? So ये 10% का 33.33 will be added to X. Yes, no? 10% का 33.33%, 3.333% will be added to X. Yes or no? Now, the thing is, when I purchase this interest, over here in SFS, can I say extra assets and liabilities of this block will come in my books? In my books, I had assets and liability related to 30%. Now in my books, extra 3.333% ke assets and liabilities will come. Yes, no? Okay, I have a question. Is it a business combination? I have a question. Is it a business combination? You are getting some assets and liabilities together, everything. Okay, that block that block which was being maintained, वो जो एक kg basin block था या AWM block था, you are extracting, you have manpower for it, you have assets related to it, you have liability related to it. It was not a separate entity, everybody was accounting their share. Now when I acquire Z ka share, Z's ke asset comes, Z ke liability comes, everything comes. It was a business. When I'm taking over Z ka share, it's a business combination. You acquired control over that much portion of assets and liabilities. Shukumar, you acquired control over that much portion of assets and liabilities. You will think, sir, we acquired 3%, 50%. Nahi hai, bhaiya, it's first of all, you have a control over that much assets and liabilities. It's a joint operation. Joint operation mein everybody has control over their share of assets and liability. I record my share of assets and liability. In my book, my share of assets and liabilities were this much. I am buying Z ka somewhat share, so Z ke assets and liabilities will come in my books. I am buying Z ke assets and liability. Assets comes, liabilities comes, everything. It's a business only. So see, related to Z share, I am taking something. Now tell me one thing. Just tell me one thing. Z had two divisions. One division you acquire and one division Y acquires. Suppose Z had two divisions. One division you acquire, one division Y acquires. Still, for me, I acquired one division of Z. For me, it's a business combination. Another division acquired by Y. For Y also, it's a business combination. You acquired a business. What division ka control you got na? So indirectly you acquired, and their assets and liabilities pe now you will have a control. Oh, so is it a business combination? Answer is yes. Acha. Now, you have paid 1 lakh for this purpose. You paid 1 lakh for getting the rights from Z. And now this thing, extraction wala thing is related to something. Now, if at all you are buying Z ka share, you need to inform to government. You have to take government's approval. Government's approval came on 30th June. Government ka approval came on 30th June. Now, if it's a business combination, I need an acquisition date. Because assets and liabilities are recognized at acquisition date fair value. Assets and liabilities are recognized at acquisition date fair value. The question, acquisition date will be, we have an agreement done with them on 31st of May. We have an agreement done with them on 31st May. But we got the government approval 30th June. Acquisition date will be, we got a agreement done 31st May. But government approval is 30th June. So 30th June is the acquisition date. Correct. Because if it is subject to approval, acquisition date cannot be before the approval is received. Now, these are the balance sheet of X and Z given. I am not concerned with May wala balance sheet. I am concerned only with June wala balance sheet. So to the figures of X, fair value of assets and liability of Z are added. To the figures of X, fair value of assets and liability of Z are added. Now I have a question. Would I get full 3 lakh या इसका 33.33%? Would I get full 3 lakh or 33.33%? Dear, in your SFS only this is done. There is no consolidation. You acquired their assets and liabilities. You acquired how much assets and liabilities of Z? 33.33. So you add 33.33% assets liability, and Y has acquired 66.67. They will add 66.67. And these are all done in SFS only. It's not CFS. It's not they becoming subsidiary. It's SFS only. You acquired their 33% business. You acquired their 33.33% business. So all their assets liability added in your book. All their assets liability added. This is not to be added. This is not to be added. Capital reserves will not come. So whatever assets there was 33.33%. I will add. Acha, now they are telling fair value of PPE and development CWIP is 5 lakh and 2 lakh. If fair value is given, I need to add at which value? If fair value is given, I need to add at which value, sir? Fair value. So now this is not 3 lakh. Isko make it 5 lakh ka 33.33%. Don't do divide by 3. They have given 33.33. Don't make it 33.33333333. ऐसे मत करो. So 5 lakh into 33.33%. So 166,650 will be added. 166650 will be added. यहाँ पे 20,000 into 33.33%. CWIP is 2 lakh. CWIP is 2 lakh. 2 lakh ka 33.33%. Fair value given. Take the fair value. And one more thing they are telling. Cash and cash equivalent are not to be acquired. Cash and cash equivalent not to be acquired. Don't include it. Cash and cash equivalent not to be acquired. Don't include it. Did you understood? Now, it was a joint operation. Everybody had a right over the net asset. Question whether it falls under business combination. Yes. Acquisition date 30th June. Now, journal entry. Their assets will come, liabilities will come. We pay something. Difference goes in goodwill, capital reserve. And then prepare a new balance sheet. I hope the question is clear. Okay, so now we acquired kind of 33% business of. We acquired a kind of 33% business of Z. Okay, so whatever we acquired of Z, business is nothing but an integrated set of activities and assets capable of being conducted and managed to earn returns. And it must have input and substantive process. When you acquire participating right of Z, the output exists. Manpower, asset, facilities, they are nothing but the inputs and processes exist. And thereby it is said it will fall under business combination. Since government of approval is required, the acquisition date is 30th June. Since government of India approval required, acquisition date is 30th June. Now acquisition entry. Now the assets coming. PP is at fair value. Fair value ka 33.33%. It's 33.33%. This is 5 lakh into 33.33. Don't do divide by 3. Divide by 3 is 33.333333. Okay, CWIP is 3 lakh into 33.33%. Cash and cash equivalent not taken over, ignore it. Cash and cash equivalent not taken over, ignore it. Other all, उनकी जो values थी 30th June की, June values के 33.33%. June values 33. Now, two assets taken at fair value. Can I say book mein value different? We included at higher value. Asset went up. Tax mein they will be taxed in future. I have to create a DTL. Tax will come up in future, DTL. So now, your PP went up by 2 lakh and CWIP went up by 1 lakh total. So 3 lakh to 5 lakh, 1 lakh to 2 lakh. 3 lakh to 5 lakh, 1 lakh to 2 lakh. Total it went up. 2 lakh is PP going up, 1 lakh is CWIP going up. Total 3 lakh going up. 3 lakh mein you acquired 33.33%. Total upward increase is 3 lakh. Total increase is 3 lakh into we acquired is 33.33%. And into tax rate is 30%. Into tax rate is 30%. Do it. So DTL will be created. 3 lakh into 33.33% into 30%. You will get 29997. Did you understood this? DTL. So PP going up by 2 lakh, CWIP going up by 1 lakh. We are including a higher value. Tax may have to pay tax in future. DTL created. We did not acquire full 3 lakh. We acquired 33.33%. Uspe 30%. And this gain on bargain purchase is the balancing figure. This gain on bargain purchase balancing figure. New balance sheet is simple. In the balance sheet of X ka balance sheet June ka tha na. Just add this all figures of assets, liability and capital reserve. It will get tallied. This all figures of assets, liability and capital reserve you added, this will get tallied. Did you understood this? Did you understood this? Done. This was RTP of FR December 21 exam. Question number 1, question number 5. 2 questions were good. Question number 1, question number 5, 2 questions were good. Tomorrow morning 8 to 10. Tomorrow morning 8 to 10, we have a RTP discussion for advanced auditing, paper number 3. Tomorrow morning, same 8 to 10, we'll meet again. We'll discuss your advanced auditing RTP. And just remember one thing. In the end, everything will be okay. In the end, everything will be okay. And if it's not okay, it's not the end. In the end, everything will be okay. And if it's not okay, it is not the end. Just make sure you put in your efforts, stretch yourself, push yourself in the last 1.5 months. Anything if you want to ask, tell me, else we end this session. See you all tomorrow. Bye-bye. Take care. I hope you all enjoyed this session. And I have lots and lots of free classes on Unacademy app. So you can just come up in Unacademy app. I'm doing a full consolidation for free starting tomorrow. Saturday and Sunday, I'm having a full consolidation for free on Unacademy app special class. Mohit has a question, sir. When will we have a MTP discussion? Mohit, it's not planned as of now. I'll just let you know in case I'm discussing it. So just be there on my Telegram channel. Any updates are there, I put it on my Telegram channel on a regular basis. But mostly MTP discussion, I generally don't do it in class. That is for you, and I personally prefer you solve MTP on your own. As a test you solve it, like 3 hours ka test jaise likh rahe ho paper, वैसे you solve MTP and then you see the solutions, where do you stand. Never see MTP solution, solve MTP as if you're writing examination. That becomes a practice for you. Thank you, Sukumar. Anything else you want to ask? Thank you, Mohit. Shumeda has a question, sir. How long will be the consolidation class? Approximately 12 to 14 hours. Approximately 12 to 14 hours. Saturday and Sunday I have 10 hours scheduled. Monday maybe 4 hours I may take. That's it. So Saturday I have from 1:30 to 8:30. Sunday I'm having morning 7:30 to 12. So Saturday, Sunday, half day kind of. Probably if required, I'll take something on Monday. It's 10 to 14 hours total will be there. I'll put the links on Telegram channel of mine. And this will be a free class consolidation. I've already done Ind AS 109. So in those students who have a problem in Ind AS 109, I've already done a free class on Ind AS 109. Total around 9 hours is there. 9 hours, Ind AS 109 is fully completed. And that link is also available on Telegram channel. Done. Chalo. See you all tomorrow. Bye-bye. Take care.